Stocks have been rocketing higher since the post-Liberation Day April 8th lows. And over these 6 months, tech is surging, chip stocks are flying, and meme stocks are once again lighting up quote screens and Reddit boards. But how long can this retail investor-led buying spree last? That's what we're asking on today's Stocks in Translation. Let's dive in. Here's the quick scoreboard. Since stocks put in that capitulation low 6 months ago, the Dow is up 24%, while the NASDAQ is up twice that, nearly 50%. But check out the chip stocks, up 80%, and the disruptors in Cathie Wood's ARK Innovation Fund, left for dead in the wake of the 2022 bear market, it has more than doubled, up 120%. These incredible returns are suggesting that the AI trade is back and retail traders are once again asserting. But let's dig in some more. This bar chart right here from Morgan Stanley shows estimated retail demand going back a decade. The year-to-date total for 2025 is already $630 billion, more than all of 2021. And if the pace continues into year-end, that will mean $800 billion in retail buying, which is what the final bar on the right is showing. Importantly, Morgan Stanley says this is not a repeat of 2021 because first, households are not at peak stock exposure, at least by historical standards. Second, borrowing against stocks is smaller relative to the size of the market. And third, a lot of the money this year went into broad funds like ETFs, not just one-off hype names. So we're probably not at froth levels just yet. But let's talk some individual names. Over the last 6 months, it's fitting that Robinhood, the poster child for meme activity, is up an eye-watering 320+%. Then there's Coinbase, capitalizing on the crypto craze, up nearly 150%, followed by Palantir and Carvana, each of which has more than doubled. And while the names are familiar, the drivers are different than back in 2021. Back then, stimulus checks and pandemic boredom, they were the big drivers. Today, it's more AI news flow, chip cycles, cloud spending, and dreams of more Fed rate cuts. If the sprint slows, this is probably where you're going to see it first. So, how do we tell if things are cooling? You want to watch for a few simple things. First, a lot of retail buying is done through options, especially all-in call options. So watch for this activity dying down. Then watch price action in leading indexes and stocks. If the fresh record highs start drying up and leaders start pulling back, that's a tell. You can even watch the intraday activity of high-interest retail names, the so-called meme stocks. Are big pops on the open? Are they seeing more buying interest? Or are the so-called gaps getting sold? This is where classic candlestick charts can help identify weakness. And finally, Morgan Stanley argues that steady paychecks are a key to retail buying these days. So if the labor market continues to cool down and firings pick up, that means the rocket fuel is drying up. So here's what to watch next. We got to keep an eye on the jobs data as the fuel gauge. But the shutdown has literally shut down the biggest reports. As long as it goes on, we need to keep an eye on private reports like those from ADP and Challenger. The Chicago Fed also recently put together a great tool that estimates the official labor market numbers from the BLS. Then watch the AI headlines that move real money, especially as earnings season evolves in the second half of October. What's going on with the cloud spend, new chip launches, big orders, and data center builds. And then there's been a lot of big AI partnerships and mergers announced. Any new export or regulatory curveballs could throw cold water on this trend. And finally, this is perfect. As of October 8th, Roundhill is relaunching their meme stock ETF with the ticker MEME. That's your daily price action gauge in one of the most speculative corners in the market. Morgan Stanley says we're in the midst of the third retail wave that's emerged over the last year. If the flow stays strong, the sprint can keep going, but watch out when those simple tells start flashing red. And tune into the Stocks in Translation podcast for more jargon-busting deep dives. New episodes can be found Tuesday and Thursday on Yahoo Finance's website or wherever you find your podcasts.